Welcome back. You're watching Buy Now, Sell Now on ET Now. It's time for viewer queries, and today we have Kunal Bothra as well as Vijay Chopra joining us to take us through your queries. So let's get on board our first viewer query, and this one is from Manoj, and he's talking about Amar Raja batteries. He's saying he has 780 shares which he's purchased at the price of 115 rupees per share. I believe, Kunal, what he wants to know is what should he actually do with his current holding with Amar Raja batteries. So I'll take it first to you, Kunal. Good morning. What should Manoj do with his holdings in Amar Raja batteries? He's purchased 780 stocks at 115 rupees per share.
I think if he's bought at 150 rupees per share, he's making a tremendous amount of gain. I think the stock is at 750 odd levels, so he's making more than 5x kind of returns. I'm assuming if it would have been a time frame of at least 5-6 years, because the last time the stock was at 150 odd levels was I think closer to 2013-14 odd time frame. But nevertheless, I think the stock is looking quite strong on the long term chart. So even though the last 5-6 months have been a bit rough for Amar Raja batteries, it's corrected from those 1000 levels, come back to 700-750 zone. But net the longer term patterns are still quite intact. The stock is going through a consolidation over the medium to long term charts, and I think because of that.
Kunal, sorry to interrupt you there. Kunal, I'm sorry to interrupt you there. I think I've read the question wrongly. What Manoj is saying that he's bought 115 shares at 780 rupees per share. I'm very sorry with that theory, with that question jumbling that I gave you. So it's 115 shares that he's purchased at 780 rupees per share.
So yeah, so as I was saying earlier, the view remains that Amar Raja battery is a stock which is in the consolidation, and I think the lower end of the support range is closer to 700 mark for the stock. So I would suggest that if you're looking to hold the stock, then I think closer to that 700 mark is where you can look to average. Yes, the stock has been an underperformer in the last 5-6 months, and that underperformance can continue for some more time. But I think if time is not a constraint from your end, then I believe closer to that 700-720 range is where you can look to average further on Amar Raja batteries, bring down your cost price, and then look out for a target potential closer to 800-850 range.
So in the true spirit of the Indian cricket fan watching a World Test Championship, I think Manoj has bowled a googly and Cheryl has fallen lock, stock and barrel for it. But let's take the next question. We've got Sumit Kumar Dash who's asking about Newland, and I'm coming to you on this one, Vijay. What do you have to say about this? He's already bought at levels of 2700.
Is it 2700 you said?
Yes, 2700.
Yeah, so I think that it is nicely consolidating at around 1980 odd levels. The company has done well. Results have been quite good in the last couple of years, and it has corrected and might also consolidate a bit further. I think that if you find this stock somewhere around 1850 or maybe around 1900, it's a good level to get into the stock again and average your buying price and bring it down. And once it starts moving, I'm sure that it will go up and cross 23-2400, and you can earn some profit. Newland per se, technically speaking, doesn't look bad, and it is consolidating nicely. And as a company also fundamentally, I think the company should do well over a period of time. And yes, it is a time to be conservative. So Newland is one of the sectors which I mentioned, in the healthcare space. So better to be conservative in such times. So if you get the stock somewhere around 1900 or lower, 1850, 1870, try and average and bring down your cost price.
Our next viewer query is from Tarun Gambhir, and he wants a short-term view on Ambika Cotton. Kunal, what's your view on this particular counter? How does the charts for Ambika Cotton look like?
I think it's a more of a stable stock. Again, the only catch with this name is that it's a bit illiquid. So, for example, today's volume as well is just about 15,000 shares for Ambika Cotton. I think the nearest support for the stock is at its 50-day moving average, which I think, if I'm not wrong, is at 1070 or 1075 on the stock, and currently it's placed at 1145, 1148 range. for itself. So it's a stock which has a good history on the charts, on the medium term as well as on the longer term time scale. Typically, when you're looking to buy these stocks, it's a prudent strategy to wait for the stock to complete a mean reversion. So a retracement towards 50-day moving average or a 200-day moving average could be good points where you can look to enter. 1075, 1080 is support, which I indicated earlier. I think closer to that level is where you can look to buy.
Okay, we've got the next question coming in from Anjali. Sorry. So Anjali, by the way, I mistook this for Neeraj's question. You were asking about Meghmani Organics. The trading has been halted, yes, for procedural reasons. I've responded in the chat. Neeraj is asking about Granules India. I'm coming back to you, Kunal, on this next one. Or rather, sorry, I'm coming to you, Vijay, on this next one. He's bought Granules at 320. And he's looking for a 2 to 3 years target. Now again, see, I do want to point out, dear viewers, if you are posting a question, please be very clear whether you are posting about the buy price or you're posting the number of shares. So I will say, Vijay, that I'm not sure about the buy price, but he's planning to hold for 2 to 3 years. What is your recommendation?
I think in pharma, if somebody is a long-term investor, I think if he's already in the stock, probably we might see some more correction in this stock. But yes, over a 2 to 3 year period, I think the stock can do well, and I would recommend targets of 500 plus in this stock. But yes, at this point of time, because the stock has considerably run up in 2020-21, we might see lower levels. Probably this stock might also come to 270, 280. But there I think would be a good price to average or take even fresh positions. But yes, as of now, I think the stock might correct. The markets are in a state where we might see some kind of a logical correction. I won't say a very sharp correction, sharp cut, but yes, a logical correction is required in the market as well to make it healthy. So Granules over a period of 3 to 5 years, I think it's a good stock. 500 levels can be achieved.
All right, our next query is coming in from Bhargav, and this is for Mazda. He's saying the current market price is at around 615 rupees per share. He's saying the stock is trading at near important support level of 615. He wants to know whether it is profitable to take position at current price in Mazda. Kunal, what's your view on this particular counter? Not many actually know of this particular stock. So what should Bhargav do? Does it make sense to actually take position at current market price?
Well, I think it will be better if the viewer can wait for some more time. So even though the stock in last 2 weeks has gone through a corrective phase from 720 to 615, 620, where it's currently trading right now, but the stock has a typical behavior. At least the charts which I can sense on the stock indicates that the stock is moving through a range of 200 odd points. So 250 to 450 was the previous range for Mazda. It remained in a consolidation for quite a long time, in this band of 250 to 450. And then once 450 was taken out, that was I think 3-4 months back. Then you saw the stock moving up from 450 to 650 odd levels. So this is a 200 point range which the stock is migrating to or gradually shifting towards. And in that kind of an environment, buying at the higher end of the range on the upside may not be a prudent strategy. So I would suggest a wait. Let the stock at least come back to the middle point of this range, 550 odd levels. That's where I believe could be a good starting point for you to enter the stock.
Okay, we've got a very interesting question, Vijay, and this is not about a specific stock, but it's coming from General Dhuradia. He points out that he's 18 years old and he has invested 50,000 rupees in equity. I do not know which stock he has invested in. He feels that a stock market crash is coming and he's worried and he's wondering whether he should sell his holdings and then buy during the crash at dips. He's asking, and he's specifically asking because he has only 50,000. I wish that I had invested 50,000 rupees when I was 18 years old. I think I would be a much happier individual today. Having said that, what advice would you give to somebody who is invested at such an early age? Can you give him a few stocks to say that when he comes to my age, he'll be beaming with happiness?
Well, I think that, I'm kind of happy and even perplexed a bit because whenever we see a bull market, there are new investors which come, and as young as 18, I'm sure that even younger people have opened accounts, if at all they can, in some other people's whatever. So people have come into the markets expecting that they are going to make a killing, and at times they get caught up, as we mentioned earlier, at the fag end of the rally. But yes, there is a definite risk of markets, correcting. As I mentioned, there's no crash I see, but there's a correction definitely I see. The reasons are: number one, we see the inflation, which is going off the board. Secondly, the crude prices are firming up. Thirdly, the dollar is strengthening, and of course, we have a huge fiscal deficit at hand. The growth in the growth part is definitely questionable, because barring a few companies or maybe a few hundred companies on the top, we are not seeing a major growth on the bottom of the pyramid due to the lockdowns and the last 1.5 years of mayhem which has happened. So I think that we might see some kind of a correction. But yes, what to buy in a correction? Now there are stocks like ITC, there are pharma stocks, there are good MNC pharmaceutical stocks like Abbott or Sanofi, or companies like Gillette, or even companies like Dabur, I would say. And these are companies which are there. They have bellwethered many storms and many corrections. So I think that get into a conservative company. ITC, I would say, for an 18-year-old, he can get into an ITC which doesn't move much, which can save his capital. And yes, if at all we see post correction some kind of an up move in the market, he can definitely switch to other companies. But ITC is a good dividend yielding stock and would save his capital if he wants to remain invested.
Next viewer query is coming in from Sagar. He wants a technical view on Timken India. He's holding 500 shares, which he's purchased at 980 rupees per share. He's saying, is it possible for the stock to reach 1600 levels? Kunal, what's your view coming in on Timken India? Can it go above the 1600 per share mark?
Well, very high possibility for that, frankly, Cheryl, because the stock is now just on the verge of a breakout of this 2-month consolidation, and it's been a fabulous stock as such. You look at it from the March 2020 lows, the stock has done 3x from those kind of levels. You look at it in the manner in which the stock has moved up higher. So it tends to go into a rally, then a very marginal kind of a correction which comes across, and it tries to protect the 2-month or the 3-month lows prior to that. And I think that's the kind of a rally which you typically see into stocks which are very strong and sturdy in terms of trend. So I think Timken India is a stock which falls into that category. And as I said, that even on the short term charts, like the last 2 months, it's nearing a breakout of this 250 point band. And I think as per the viewer, the 250 point band target could probably come back to 1650 odd levels for the stock as a target range. So very high potential, high probability trade that the stock can come back to 1650 plus levels.
On this next one, Kunal, and maybe we can just amp up the speed a little bit, 10 minutes more on the segment. We've got a question coming in from Hitesh asking about SBI. Bought at levels of 430 shares. Given up a little bit of that ground, would you say hold on for the short term?
Yes, I would suggest hold on for the short term, and I think use these dips to buy. I think at 400 levels for SBI could be a very attractive zone to buy. So I would suggest that average it out further and look to hold on to the stock for at least the next 6 months to 1 year.
All right, the next one is from Shanti on Corp, saying that that particular counter has moved from about 80 rupees in April to 170 rupees right now. Wants to know what is actually this. Please explain the structural growth supported for this bull run price action, as well as whether with this will this stock turn out to be a multi-bagger if invested at current market price. Vijay, what's your take coming in on Corp? Does it make sense rather to invest in Corp at current market price?
Well, I think I don't recommend a buy on these levels, because we've seen a very, scorching increase in the prices. And as a company, if you track, there are certain fundamentals I would like to mention here. The company's sales growth has been, kind of tepid over a period of time. So it has not shown any major sales growth from 470 crores in 2010 to 472 crores in 2021. So the last 11 years, the sales growth has been, absolutely flat. The stock is doing an EPS of 5. So I don't think that it's a great EPS to be invested in. So somebody who has already invested, made money, come out of Corp. I would not recommend that a company which is growing negatively over the last 10, 11 years or even flat, because if you adjust inflation, there would be no growth at all. So no point of being in Corp. And during these last 4-5 months, we have seen a lot of small caps and mid caps have shown tremendous growth, but it doesn't mean the companies are great. So we have to look at the growth of the company, the business of the company, and what kind of promise it has for the future. So I don't think Corp per se, it has done well. Okay, you come out of the stock if at all you are invested, but do not invest afresh. So there are great opportunities elsewhere. As I mentioned, there are great sectors to be in. No point of unnecessarily getting into a stock and then losing your capital.
AB asking a question on Naukri, that's Info Edge, bought at levels of 4,650, and he's still in the green, so he's asking whether he should stay invested essentially. Kunal, it's under pressure today, but I also believe that you are positive on the stock.
Well, yes, Alex, and I believe that it's a good stock to hold on to from medium to long term view, and specifically the last 5-6 months have been just 1 month positive, 1 month negative for Info Edge, which means that the stock has been consolidating. You look at the band for the stock in the last 5-6 months, it's been moving in the band of 4,300 to 5,000. So this is the 700, 800 point band for the stock, and it's been moving in this band in a very topsy-turvy kind of a manner. So it's a stock which is consolidating, but it's a stock which has a brilliant history over the last couple of years. And I think purely on that aspect, I would advise that you should hold on to the investments. In fact, convert this into rather than looking at it more from a short-term play, convert this into more of a longer-term play and use those dips which come along the way as good buying opportunity further.
The next query is from Ramanujam saying that he wants to know whether he should look at investing in Sequent Scientific with a 4 to 5 year horizon. Vijay, does it make sense to invest in this particular counter? Does it look good for the longer term investment?
Well, can I mention something about Info Edge? One thing I think Kunal missed was that this company holds about 20% in Zomato. Zomato is planning an IPO. So I think there is a huge deep value in this stock even at these prices. So my sense is that the stock can definitely go up to 6,000, 6,500 as well, because there's a lot of value unlocking happening. As far as Sequent Scientific goes, I think it's again a great company, consistent growth story, and it has also corrected from the levels of 315 odd to 260 odd. So surely one can invest with a longer term perspective. This stock will consistently keep on growing year on year and can give consistent returns. So buy around these levels. 250 would be a great level to buy and get into Sequent afresh. And I see 400 plus targets coming if somebody holds with 4-5 years perspective.
Okay, a number of people have asked about graphite as well as HEG, and I'm coming to you on this next one, Kunal, because they have given up ground, and I think to a certain extent these stocks are tied to what happens with steel prices globally, and you see them moving one way or another based on what you see there. But on the charts, are you seeing anything that would suggest that there are some levels that you can nibble into, or if you're holding, what should you do on these two stocks?
So yes, Alex, you're right in the sense that these stocks are more commodity-linked stocks, so they tend to get affected if there is a sharp correction in the commodity basket as such overall. And I think which is why stocks like Graphite, HEG, and many of these other commodity or steel-related stocks, they've gone through a correction. But what happens is that these periodic corrections which come along the way, and if they are very short time span, but they are very sharp in nature, the indicators come back into an oversold territory, and that's the classical time to go contra into these names, because the fear is extremely high, the capitulation is going on into these stocks, and which is why the indicators come back into an oversold territory. So if you're a bit contra, if you're a bit courageous at those kind of levels, then the rewards could be far more fruitful in these kind of names. So you've seen that happening for so many number of stocks which have been high beta in nature. For graphite specifically, I think the RSI, for example, has come back to 2025 levels for the stock, which is just about very, very close towards hitting the oversold territories. So you can start nibbling at current levels and then maybe look for another, 5% to 10% kind of a bandwidth on the lower end to average it out further. Say closer to 550 is where I would suggest that you should do the second averaging for the stock. And if the oversold nature bounce gets replicated for stocks like graphite, then you could be looking at a target of at least 675 to 700 in the very, very near term.
Who's holding L&T Finance holdings since 2017, Vijay, and he's making losses about 50% of his capital. He's asking whether he should hold on with the hope that it will recover some of the lost ground, or should he switch out to something else?
Well, I think if somebody is making 50% losses, then he must have bought somewhere around 180. The stock is around 91 right now. But I think that this current momentum, if at all the stock goes up, which I think, it looks very strong on the charts, and fundamentally it has a good management, good lineage. So it can go up to 115, 120 as of now in the very short to medium term. But yes, reaching 180 would be a task, and it would requires a lot of patience. So what I would recommend is, if he can get somewhere around the stock around 88, 87, he can average and, then book profits around 120 odd, and this would bring down the cost price to some extent. But yes, 180 would be quite a task to reach in the short term. We have to see how the economy pans out and how things pan out post COVID, because for NBFCs it is definitely an uphill task for even companies like Mahindra Finance or L&T Finance or the other ones. So I think that for the entire financial sector, barring the PSU stocks, which are completely undervalued, but yes, the private side of it, the NBFCs are going to have a lot of challenge inching up their business, because one, there is a lot of competition. Secondly, the economy is not conducive, and with this kind of an environment, if we see an interest rate hike coming in, there would be a problem for sure, because higher interest rates would shoo away customers. So yes, in the short term, he can probably average at a lower price and then sell around 120, 125.
Alright, the next viewer query is coming in from Rajan, and he's saying that he has 200 shares of Motherson Sumi, which he's purchased at 235 rupees per share. What's the short-term target for Motherson Sumi, Kunal? What's your take coming in on Motherson Sumi, 200 shares, which he's purchased at 235 rupees per share?
So I would suggest to hold on to the stock, even though the stock is consolidating, but I believe that the history and very, very decent history for Motherson Sumi is very encouraging. The stock has a habit of going into strong periods of uptrend and gradual periods of consolidations as such as well, consolidation like what the stock is currently going through. So I think if I'm not wrong, just about a couple of weeks back when the results were announced, the stock had hit a level of 270 odd or 255 to 265 odd, and from there it's now gone through a corrective phase. So I believe that these are good territories where you can look to buy or hold. If you already bought, I would suggest a hold and look out for targets back again at the 255 to 260 mark for Motherson Sumi.
Kunal, coming back to you for a very quick view on L&T Technology Services, what price would you buy at, if at all? Soumitra is asking.
I think current levels could be good enough levels to be bought into. 2750 is the support for L&T Technology Services. It's also the 50-day moving average for the stock. I think that could be a good entry point for a contrarian buy.
Let me come back to you. What are your high risk and low risk ideas for our viewers today, Kunal?
So two buy calls. First one which I would suggest would be a buy on Shriram Transport. That stock, in fact, many of these NBFC stroke HFC names are the ones which are seeing a strong bit of short covering as well as buying. So I would expect Shriram Transport as well, the stock which has a brilliant short-term history as well, to perform very well from near term. So I would suggest a buy. Targets to be kept at 1450, stop loss 1325. And the second stock would be from the paints pack, Asian Paints. Apparently, it's now become a very low beta kind of a stock. The moment the stock had broken out about that 3000 resistance, it's gone into a very strong and a sturdy uptrend for itself. So I think even at current levels of 3050, 60 odd, Asian Paints could be bought into for a target of 3200. and stop loss at that breakout point of 3000 levels.
Okay, coming to you, Vijay, on your high risk and low risk ideas, what do you have for us?
Well, I think there are a few stories I would like to discuss. One is Trent. This is again with the opening up theme. As malls are opening up, Trent is one of the Tata companies for people who don't know, new investors. So Trent is a very established brand website, and they have stores all across the country. And they do very good brisk business. Apart from that, they have brands like Lakme. So presently, Trent, which is trading at about 853, 854, it could be bought for a target of 875 in the short to medium term. My second recommendation would be DLF. As I said, that I'm fairly bullish on the real estate pack, and there's a lot of pent up demand. And DLF has posted fantastic results and shown a lot of promise as far as the residential sales are concerned. So residential sales are picking up. So the stock is at about 295, 296 right now. It could be bought for a target of 315. And my final recommendation would be on InfoEdge Naukri, which is trading at about 49.90. And as I mentioned, that I'm in the short to medium term, I think the stock should do well because one, it's on the tech side. Second, as tech is safer than other sectors. Number two, as I mentioned, it has 20% stake in Zomato, and Zomato is going to come up with the IPO. So this would do some kind of a value unlocking here. And in the medium term, I think 5,200 is quite possible. But if somebody holds with a longer term perspective, I think 6,000, 6,500 is also possible. So these are three ideas for today.
Thank you so much, gentlemen, for taking the time for answering the questions that you did, and also providing the perspective on the Adani Group companies and giving your recommendations. It's been a pleasure speaking to you as always. We're slipping into a short break, but more on the other side. Do stay tuned.
Co-powered by LG Air Conditioners, all in one in all.
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no